The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen. Thank you very much for being with me today. And good evening indeed in America. Can you hear? How are we going for volume? Anyone, please just type in the question box that you can hear all right. Make sure. Yes, Norbert's good. He's up in Canada. Fine volume. Thank you very much. Good. Good. Bitcoin is Satan. Avoid Bitcoin. Quite right. Jerry's with us. Jerry Winter. Hello, Jerry. How are you? Sent you a couple of new clients lately. Good to hear. Okay, Chris is with us. He's a tutorial guy. Lots of tutorial guys with us now. Welcome, folks. Anyway, good morning to our friends in Queensland. Good afternoon to the rest of Australia and New Zealand. Great to be here. All good here in Swanage, UK, says Jeremy. Jeremy, it's 82.5 degrees here today. It's absolutely beautiful. Sort of getting towards the second half of summer. The grass is green, the ocean's blue. I've got my shirt off. I'm going to go for a swim as soon as this is finished. Bitcoin, what WTF is wrong with the stock market? Well, good. I'm glad you've asked that, because the answer is nothing's wrong with it. It's fine. It's doing just exactly what it should do. What a week to be having a webinar, folks. I mean, the drama, wonderful stuff, isn't it? Drama is intense, and of course, if you're a futures trader, it means you like chaos, and the markets pay exactly the same going down as they do going up. It's pretty fantastic. Okay, let's move on and let's have a look at what's happened, and let's get a realistic appraisal of what's caused it. Markets are rational, orderly, sometimes predictable, as you know, those who've been with us a long time. And of course, we had all the perfect sell signals in all of the equities, just exactly right for this pullback. The Daniel Code members charts had the blue lines, and that's where the markets hit. I based this webinar today on this scary number 666, and it comes from the book of Revelations, and it is the number of the beast. His number is 666. And it's very interesting because apart from all of the connotations that flow with the beast, it's a number that we see in markets occasionally, not often. But if you take the time to read Revelation chapter 13, you'll see that this beast is capable of doing good as well as doing ill. And you're going to see that in this tutorial today. This is probably the most famous exposure of the number of the beast. This is the low, the March 2009 low in the S&Ps. Just let me make sure that your screens have changed there. Yep, and this market made its low on the S&P index at exactly 666. We had a tutorial going on in Taupo, New Zealand on that weekend, and we had buy signals. You had to be pretty brave to buy this market, but we had blue line signals, TO3 and blue line signals, and everyone at the tutorial bought it pretty well. That was the low, 666, the number of the beast. So that put a stop to the downturn from 2007 to 2009, which is an example of the beast doing good. But he doesn't always have to do good. He can do good and he can do bad. And you'll see here as we go through today just how important this number has been in this particular little pullback. Here's the chart of the Dow. This is the mini Dow that we trade. And you can see at the high, right on the day, we had a plus sell signal. We got short. Let me get up the other chart so I can give you the numbers here. Just bear with me while I get there. Here we are. We got short on Tuesday, January the 30th at 26414. That's a nice number, isn't it? That bar, have a look at the first bar down on the chart. I've put a note against it, say, and it's a waterfall trend chain signal on the close. And as well as that, of course, it was an overbalance in price, which is One of the things I've been talking to you about lately is a method of determining trend. That's a fairly old method, both balance of time and price. We have much more sophisticated methods than that, which I'll teach you if you ever decide to do a Daniel Code tutorial. But it's still, even though it's an oldie, it's a goodie. And when it appears, take notice of it. So we had our sell signal. It was a DC plus sell signal. And at the end of the day, the trade was elected. At the end of the day, if you looked at your chart, you should have said, that's a change of trend. The trend is now down. And the whole of the theory of trading, or at least the theory that I work on, is if you're with the trend, you try to hold the trade as long as possible, but never ignoring a new signal. And if you're against the trend, you try and be very aggressive with your stops and exit the trade at the first possible opportunity. So here's the Daniel Code. This big rundown is pretty exciting stuff. That trade made about $14,500 at some stage on after the day after the big day, about $14,500 on the Tuesday. When you get these massive, great big bars, folks, you have to use a trailing stop. But don't make it too tight. It guarantees you'll get stopped out. I got stopped out about, well, you can see about where this line goes to. That's not exactly precise, but it's close enough. Then we had the other half of that day up. That was Tuesday. Another little up bar on Wednesday, which set us up for another DC plus sell signal, which was posted for all of our members to take on today. And that's kindly given us another $2,600 odd per one contract. So let's see that. So why WTF is wrong with the stock market? Says Mr. Bitcoin is Satan. Well, that's where you get turns at the Daniel Code numbers and the Daniel Code signals. There's nothing wrong. Have a look at this. This is the 666 in time, folks. This is a 3-day chart. I don't show this to you terribly often, but it's kind of interesting that the start of this run actually comes from a low in February the 5th, or the 3-day period ending February the 5th, 2014. And then there's another little high between two lows, which becomes the high before the high. And that's in January 2016. You'll see that those extensions of those time cycles there, we're using 111, which is a sixth of 666. And you can see that the high came right exactly to the 3-day period on the 333 count. That was 2 times what we 111, but it gave us a 333 because the 2 actually comes on the 1. This program from Trade Navigator numbers them incorrectly, but you look along the bottom of the page, you can see the numbers. These are periods, 111, then what's numbered 1 is in fact 222, or what's numbered 2 is in fact 333, and that's how you get your 666. And that time cycle expired exactly at the top of this market. So WTF is wrong with this? Nothing. It's fine. It had time and price. I'll show you the daily charts as we move along, but as we say, when time and price are squared, a turn is almost inevitable. Good lot of people with us today. My friend Alan up there in Brisbane, Albert, Cameron down in Melbourne. I talked to Cameron on the phone this week. It was nice to talk to you. Our friend Chase, who continues to urge me to give up smoking. Chase, you're quite right too about that. Let's see what else we've got here. Chris, he's a tutorial guy in the States. So Dave Volker, he's a tutorial guy. David Bullock hasn't done a tutorial. He's a wealth fund manager in New York, very keen trader, particularly in energies. You're going to enjoy the natural gas trade that I'm going to show you in a few moments, David. Easy 4,000 per one contract jumped in. Gig, hello Gig. Chip Stevenson, nice to have you with us, mate. Gosh, it's been a long time since we've seen you. I hope you're well and your big rugby playing mate as well. Jeff, lots of Jeffs. Jen, if that's Jennifer, if you're a lady, a special welcome. We don't have many ladies, and we certainly enjoy them. Jeremy over in, I guess it's cold and miserable UK. Jeremy, Justin, and Wooly he's down in the Hunter Valley. Lloyd's doing a tutorial at the moment, getting towards the end of it. Manish, of course, has done a tutorial over in India. Matt down in Melbourne, my mate. Nice to see you're with us, Matty. Mike, Big O, Mike, he's a tutorial guy. Lots of people here. Let me, if I haven't said hello, do you take my Robert and Anne Parry? There's another lady. I know Bob's been with us a long time. So Stephen, Tom, that's the other half of the wealth managers. He's down in Florida. And Vicky, special welcome to you. How lovely to have you. Dean says, hello, John, from brutally cold Alberta. Mate, why do you live there? You can come down and live at the Gold Coast if you like. I'm sure we'd be happy to have you. Anyway, there's 666 in time on the S&P index chart. So no great big surprise about this move. Now, I do always make clear that all of the 4 Celsius in UK, you're kidding, Jeremy. Leave me out of that. I always try to make clear to you these Daniel code signals, they're very, very accurate, both in time and in price, but they say nothing about quantum. You could just as easily have got a one-day counter trend as this massive sell-off. You need to look at the other evidence as to why this move down sort of built up and cascaded a bit. This is the 12-day chart on the S&P, folks. You've seen this periodically over the last year. I sort of show this to you every couple of tutorials. And this market topped just 11 points off the target of 2883. Now, that's on a 12-day chart. That's pretty accurate. 11 points, 11 full points, not ticks. 11 points is nothing like as accurate as we get on the daily chart, which I'll show you. But 11 points on a 12-day chart is pretty accurate. It's quite interesting how accurate these things are. This is the members chart to show you the difference between them. And the the members chart had a blue line, one of our important targets, at 2878. And the high of this market was just 2 ticks away. This is the S&P futures contract. So that high actually was the day after what appears to be the high. It was January the 29th. That high was 2878.5 against the blue line 2878. So just 2 ticks variance. Very, very precise, specific. That's what's set up. The sell signal for the next day, a Daniel Code Plus sell signal. And this market obliged by just you didn't even have to deal with one counter trend. Down it went, huge acceleration in the big move down last Monday, or this Monday, I should say, and it was great fun. This is why we live for in futures trading, get the volatility, get these markets moving both ways. It's fantastic. Most of the commentary on this, and boy, there's a lot. They've come from everywhere to give all the reasons why this might have happened, and of course it's always after the fact. And a lot of the blame is being put on U.S. Treasury bonds, 10-year in particular. We don't track the 10, but this is the 30. This is virtually a 20-year chart that you've seen on a number of occasions before. I've been keeping this chart since about 1980 something, and I've shown you this chart on many occasions. The interesting point here is we had an almost perfect top in this market at the 59 cycle and at 2 standard deviations from the mean. Now, when I say standard deviations, they're not your mathematical standard deviations. They're Daniel code standard deviations. They use a different denominator to do that calculation, but the principle's the same. And you can see we had a top there long ago, months and months and months ago. This is a 24-day chart. Each of these bars is effectively a month. So why all of a sudden are we getting panicked about it? Well, It went down there, it dropped back through the one standard deviation, nobody cared. It went down through the median, nobody cared. It rallied up to the median, and then it's falling off again. But it's only this argument that, oh, gee, we're worried about interest rate rises. That's something quite new. I mean, the Fed's been talking about that forever. Have a look on this chart. Back in, looked to be like about, to me, about 2016 at least. I put an arrow on here when the Fed started talking about raising rates. So nothing really new there, and doesn't bounce with me as a serious reason. Monday's rally on bonds was pretty predictable. We actually had a blue line buy for that. That's the big outside bar that went up, and I put in that would be, that's Monday, February the 5th, the big grey outside bar. I put a note on members' chart saying that this was intervention by the PPT, and Albert, I think, came back and said, wow, do you mean to tell me that the PPT know and use the Daniel code? I don't know that, Albert. I have no reason. I have absolutely no proof of that at all, other than this. Those of you who've been with us a long time, and there are many of you here today who've been with us for years and years, know that I've said this on maybe 20 or 30 or 40 occasions. Every time there's Fed intervention, it always happens at a Daniel code time or price cycle, and sometimes at both. So that's the evidence I have. It continues to be there. That buy signal just gave us a one-day up counter trend. This chart hasn't got today's data on it, folks. It's actually taken out that low again now. And I can tell you that today has closed at 144 carat 9 against the Daniel code blue line 144.11. So we've got a buy in this market for Friday, and we'll see what happens. Okay, here we are. This is the 6-day chart. Mr. Bitcoin is Satan. Have a look at it. This is the S&P. Look where this high came. It was right on a variant of the 59. This is not the 59 crash cycle. That has to be high to high and on the first hop. This is a 59 cycle running from a high. It now looks like a very minor high, admittedly, in June 2014. But if you see how it's on that first bar above the median line is the thicker blue line. It qualified as a valid place to start a count from, because that's more than one standard deviation from the mean. And if you look at your 59 there, gave us a lower high, then a minor high, then nothing, and 1.5 times, which is in fact 2.5 times. The 59 gave us this current high bar on the 6-day chart. So we had time, we had price. We had a market at 3 standard deviations from the mean. You only ever see that in blow-offs. Usually I've only seen it generally in commodities. Very, very unusual to see that level of enthusiasm in one of the indices. And when I show you the long-term chart of the Dow, it's even more extreme. It's quite extraordinary. And markets just can't live at those levels. There's just no historical evidence to suggest they can. This is the Dow, folks. This is the futures contract. And if you look where the high of the current bar went to, it went almost exactly to the upper blue line, which is 4 standard deviations from the mean. I tell you, they're Daniel code deviations, not your basic mathematical. We use a different multiplier. But 4 standard deviations from the mean, that's just stopped this thing like it's been hit by a truck. So WTF is this market doing? Exactly as it should. It had time and price. And when markets have time and price at known Daniel code levels, a turn is almost inevitable. Again, I want to stress the Daniel code signals say nothing as to quantum. This could have just been a 1 to 3 bar counter trend. Didn't mean it was going to be a biggie, but if you're in the trade and if you're in it the right way, then you get the goodies. It's that simple. It's amazing reading all of the commentary on it. Boy, they make it terribly complex. Some of this risk parity stuff and gamma and beta, and my goodness. The reality is, if you know how to trade, you're always with the trend. And if you're always with the trend the way we are, almost always, then when the goodies come, you get the lot. This is natural gas, which David trades up in New York. There trades very well and very successful with it. And here we had a TO3 sell signal on the day of the high, which was January the 30th. Sell that low, and then have a look at what happens. The first bar after the high, that is an overbalance in price. That's telling you the trend is down. So that's the reason you try and stay with this trend as long as you can. So far, we've had $4,600 odd per one contract profit, and it looks to me pretty close to the end of the run now. For those of you folks who've done the tutorial, of course, even though we're staying with the trade, we never miss a new time signal, do we? All of those, or most of those down bars actually gave time buy signals. Put your order on, they're not elected, just do the same thing the next day, same thing the next day. But there's a really, really nice run we've had in natural gas this week and last week. Fabulous. This is the NASDAQ, folks. Same thing. This is we had a DC plus sell signal in the NASDAQ, right at the high, exactly at the high. Let me just find it here. NQ, that's in here somewhere. There it is. Right at the high on Monday, January the 29th. That set up a Daniel code plus sell signal, which we took. The first bar down, ponder this, the first bar down, January the 30th. That bar gave us a probable change of trend. Okay, if you can't see why that gave us a probable change of trend, it is an overbalance in price, meaning it's the biggest down bar since the bottom of the upward swing. It is an overbalance in price, but it's also a number of other things as well. Sorry if someone says my voice is breaking up. It's all right at my end. We've got an awful long way to go with our signal to carry to you. If you're having trouble with the volume, I'm sorry. It says it's okay now. Mr. Bitcoin is Satan. Thank you. Glad you're listening. You get the first bar down tells you this is a probable change of trend. That means we're going to try and hold this trade, but never ignoring a new signal. And down it goes, 1, 2, 3, 4, 5 days down. The trailing stop caught up with me on the 6th day. I was very happy about that. It was a lot of money, about almost $12,000 per one contract. We let it rally. We had a key reversal bar the next day, which was yesterday, and I had a new sell signal in the Dow for today, a DC plus sell signal. Now, remember what I've told you in the past, folks, about correlation. Some markets are so highly correlated that a Daniel code signal in one can be executed in any other. All of the indices come into that group, Russell, Dow, S&P, NASDAQ, and Germany's DAX. If you have a signal in the Dow, you prefer to execute it in one of the others, that's quite valid, so long as the trade is elected. In this case, we went to a bit more trouble than that. As often as not, I'll only put on one of these, or one or more of these signals. We went to an awful lot of trouble to make sure that you didn't miss the message, and the signals posted on Monday night. Here we are. This was Friday, Monday night, 2 hours after the market closed. We had a sell in the NASDAQ, a sell in the Dow, a sell in the S&P. and then the very next day we got to sell in the Russell. So we tried to make sure you got the message. And boy, it's just been fantastic, hasn't it? Anyway, there's the NASDAQ. Don't forget about correlated markets, and gold and silver are also highly correlated, as is the EUR-AUD index. That's the index of unhedged gold miners. And there are no futures in it. You've got to trade it with options. But I put up the signals anyway because it's so highly correlated with gold and with silver that if you have hey Maddie, thank you. That if you have a signal in any one of those markets, you can execute it in any other. In other words, if you have a signal in EUR-AUD index, you can execute it in gold or in silver. Be very careful about trading both, Dean, because they're so highly correlated that essentially you're trading the same markets most of the time, or a large part of the time. You Forex folks, you haven't been left out. You've had a booming week in Forex. This is Euro-Aussie dollar. We had a TO3 buy. Same sort of thing. This was a little bit more difficult, this trade, so I just want to share it with you. The entry was easy enough. Euro-Aussie, here it is. And we had the buy signal on the night of Monday, January the 29th. After that down bar, buy was 2 ticks above that high, and off it went. Now, you didn't get a big overbalance of price to tell you the trend was up, but in fact you got that all the way back here, back on January the 12th. I'll just put my highlighter bar on so this might help you a bit more. Spotlight, they call it. Now, there's this bar here. This is the overbalance of price that tells you the trend is up. This is the biggest up bar on the chart. And then you know, if you got confused and said, well, that's a big down bar, yes, it is. So is this one. So it wasn't quite as easy to make the decision that the trend had reverted to up by that means. But if you had the normal Daniel code tools, you saw that there was a probability that that bar, in fact, the next bar, you couldn't get out on that bar. You didn't get a profitable close. Remember, folks, if you think you're against the trend, keep a tighter stop and get out first profitable close. You couldn't do that on this bar, which is January the 30th, because you didn't have a profitable close. And you didn't get a profitable close, which at least gave you the option to get out until January the 31st. But by then, you knew that the trend was up. Okay, so that was nice for the Forex traders. Here's another one, a much simpler one. This is the British pound, Japanese yen. We had a plus sell signal right at that high. Japanese yen, here it is. Nice, happy high sitting there looking at us. Was February the 2nd. We had a sell signal for the night of February 2nd, was executed the next day, whooshed down, it went, huge bar down. If you decided to exit on the close of that bar of February the 5th, that's quite valid. When you get a really, really big bar, it's quite valid to enter. For those of you people who've done tutorials, modify that to say when you get the biggest bar on the chart, you know, the chart you can see, which is usually 5 or 6 weeks of data, and it's against the blue line, it's certainly worth taking your profit, say thank you very much, because you know how to re-enter the trades. There was another nice big trade there. Monday's report on the DAX for the fourth seal. I know not a lot of you are subscribed to the fourth seal, which is a pity, but for those of you who are, Frank DB, who does most of the work on the fourth seal, helps me with it, has been absolutely spot on with the DAX. He's been very, very good on gold and DAX in particular. And remember that the DAX is so highly correlated with US equities that what you see in the DAX, you can also execute those trades in US equities. And what he said is the DAX made its top on the 70 cycle top. Cycle is very significant for the euro. We call the 70 cycle the heathen cycle. It's not really got anything heathen about it. It just means that it comes from a different part of the book of Daniel. And it was a cycle much loved by the father of modern science, he wrote more about his Christian beliefs, actually he did about trading. Let me see what we've got here. Just bear with me for 1 second, folks. Horrible things. I've got a new computer and everything to do with it is on apps, and I don't know anything about apps and don't want to know. Anyway, Sir Isaac Newton, he wrote a very interesting piece many, many years ago. It's still available on the internet. It's called Revelations on the Prophecies of St. John. It's on the internet. It's free. And he uses the 70 cycle from the book of Daniel for what he's trying to do there, which is calculate as a method of prophecy the coming of the Messiah. I don't use the methods he did, but it's interesting that other minds have gone to this idea of how much of what's in the Bible can we use in the modern world. So there he says, suggests now there's more to go down the downside. Trend is now down. Looking for sell signals, we should be set up for an intermediate degree decline. We did not top on a crash cycle, so a crash is unlikely, but it is likely. And I know there's a spelling error in there, but Frank's a Belgian. English is not his first language, and he does very, very well with it. But it is likely that this sell-off is going to be profound. Wow, you certainly nailed that completely, Frank. Thank you. And here's the 24-day chart of the DAX from the fourth seal that Frank posted on Monday, and you can see that this market topped on a 59 cycle. That actually gave you the closing high, and then 3 bars later you got a higher high, which is the chart high on the 62 cycle, but the closing high came on the 59 cycle. And this is the DAX chart. Very interesting. Let me tell you the dates on this so you can follow it on your own machines if you want to. Here we are. So the important bar here was January the 23rd, and that bar closed at 13,569 against the Daniel Code blue line at 13,567. Remember, target recognition is valid on the bar, high, low, or on the close. This is a case of target recognition on the close. So, of course, we got sell signals the next day. Same thing. The first bar down told you there was a probable change of trend. The second bar down certainly confirmed it. You had a couple of inside days as the troops got themselves organized to be short, and then whoosho down it went. Have a look where this market bottomed. We had a black line all the way away at 12,059.5, dickens of a way away, and that market gapped down to 12,070 and rallied up from there. Marvelous stuff, really. We've had another down bar today, which is not on the chart, folks. This chart came before I had the end of day download for today. This is what all the trouble's about. There's been an enormous amount of commentaries, both now that it's happened and before, with people commenting on the VIX. Now, the VIX is a product of CBOE, Chicago Board of Options Exchange. It's what we refer to as the fear index, and typically the VIX will go up if the market is fearful, and will go down if the market is placid and happy. And these large bars we've had the last 1, 2, 3, 4, 5 days has totally distorted the whole of the earlier stuff. But I put a dotted line on there just to show you that they were the old highs back in late November and mid-December, and we had 2 buy signals right next to each other, and the most important of which, if I can find it on this other chart here, which I don't think I've got it, it's the first one here. I'll get the highlighter to show you, folks. Here it is. It's this chart, it's this bar here that's got the arrow on it, saying trend is up. This is a huge overbalance in price. So on that bar, you knew or should have known at least that the trend was up. We had one more bar up, then we had a 2-bar counter trend. If the trend is up, the next 2 bars are counter trends. We had a time buy signal, Daniel code time buy signals on both of those little lows. And then we got a bigger bar up, and then whoosh, it exploded. Now, what so much of the commentary is about is this growth. It's more of an explosion than a growth in ETFs, exchange traded funds, and ETNs, which are exchange traded notes. They serve much the same function. And the go-to easy way of making money for a very long time has been sell options on the VIX. Sell, sell, sell. And that's what it's got to the stage that it's now become part of systemic trading strategies, risk parity being the most important of them. And when this VIX has made these moves, it's blown the ETFs and ETNs based on the VIX. It's blown them to pieces. They've had 80–90% losses, which is what's called a termination event in the prospectuses for those various strategies that they've been flogging, particularly the banks. In the event of a market losing 80% or more of its NAV, net asset value, they're entitled to close that fund and pay it out. And that's already happened with one of the major inverse VIX funds and many others as well. So, you know, the strategies have got so complicated that, I mean, how can you possibly blame the VIX when you've had a buy signal, a clear change of trend that you couldn't miss, a little up, another 2 bars down, give you an opportunity to get long it, and then it takes off. Now, same thing, nobody knows quantum. Nobody knows if that's just going to be a bar up or if it's going to be a monster. But, you know, if you're not with the trend, you can't really complain, in my view. So it was, you know, quite obvious which side you should have been positioned on the VIX. And long VIX means equity markets going down, basically. That should have been as clear as day. Let's see what we've got here. So, we've got a lot of people doing our video tutorials, folks. If you do want to do it, if you would like to really be an elite trader, send me your phone number in an email. I will either send you the documentation if that's what you want, or I can call you and have a talk with you about your trading, your aims, what you hope to achieve. We've had quite a lot of people doing these video tutorials lately. The main takeaway from which is that I'm teaching in the tutorials, I'm teaching time, how to trade time as a standalone entity, and the results have just been absolutely sensational. We're sweating bricks waiting to get this into a program form, Jerry, for you and our clients, and it just seems to be going on and on and on, but we're not far away with it now. But for the tutorial people, they can learn to do this all on their own. They don't need a program. They don't need me. Once they've done it, they're the masters of the universe. And we've got a good lot of those people with us today. If you haven't already, folks, I've got another couple of charts to show you. But if you haven't already, you're very welcome to have a free trial of everything at the Daniel code. And if you haven't previously had a trial of Genesis data, which is what I use, they're a partner of mine, we can arrange a free trial of Genesis data as well. It's our compliance sheet I'm required to show you. Do take it seriously. Don't trade with real money until you're really confident in your ability to see which direction the signals are pointing, and also how to manage risk. Retention of capital is the #1 game in trading. So I think we can get rid of that. Okay, and down he goes. And now what we can show you, this is the VIX chart. Absolutely extraordinary. I wanted to show you more accurately the 12-day chart. This is the 12-day chart of the S&P, and you've seen this all the time since 2008 on. Every 2 or 3 webinars I roll out these charts for you to see, so there's no secret about them. We've had that target of 2883. This is on the 12-day chart, as I have shown you. We had much closer targets and very accurate on the daily chart. But missing this target by 12 points is pretty good. 12 points on a 12-day chart is like nothing. But look what's happened. This has gone, this darker line, the darker blue line is the median. Line above it's one Daniel code deviation from the mean. Second one's 2 Daniel code deviation from the mean. That one's 3. You can see this market has almost exactly hit that 3 standard deviations from the mean. Now, this is a valid Daniel code trading channel. To be valid, it has to start from the swing low. It clearly does that. It has to have contact with the first push out, which could be this bar or any of these bars along here. In this case, it still has its contact with the first push out. And I used to make sure it held this first retracement. Now we've moved on to hold this retracement. And you can see this thing went to 3 standard deviations. Well, where's this pullback taken it? Not far, is it? I mean, I've heard all this stupid nonsense of, everyone who's involved with the share market just wants to keep everyone fully invested and buy more, buy more, buy more. It's rubbish. It's a complete rot. But, you get it endlessly because the newspapers get the advertising from the big stock and share trading firms. So do the television stations. They're the big promoters of themselves. And naturally, that's what you get on the papers and the television. Buy and hold, get a pullback, buy more. It's absolute insanity. If there was a degree of honesty, that sort of comment, the bedrock of the industry, wouldn't be allowed. But nonetheless, what's happened here, this thing's gone up to 3 standard deviations from the mean. In a moment, I'm going to show you the chart of the Dow, which has gone up to 4 standard deviations from the mean. And look what's happened. It's only come back. It's still better than 1 standard deviation from the mean. And that's what's happened through all of here. And through here, this 1 standard deviation from the mean is a nice, happy, expanding market. Nothing negative about it. If this market does steady anywhere in here, it can go sideways and consolidate at 1 standard deviation from the mean for a very long time. What I want to make to you is in this commentary that has been blurted about, it's, oh, don't worry about the huge price drop, the 1,000 plus 1,500 points. Look at it this way, it's only a very small percentage. That's rubbish. You don't lose money on percentages or gain. You lose money as the ticks go down, and you make money as the ticks go up. So I'm just more than usually dismayed with the commentary we've had on this market move. So I want to show you that. I also want to show you the US dollar index. And I'm not quite sure which chart it's on. Here we are. This is it here. This is our 50% retracement. You've seen this chart before quite a lot. We can take off this other retracement, which was the old highs. That may still come into effect. But this is what's important. We've had this 50% retracement on this chart for months and months and months. And this pullback in the US dollar has been quite swift and quite steep, and it's part of government policy. Trump, when he was campaigning, was always bashing the fact the dollar was too high, and a cheaper dollar is much better for exporters. It means your goods are cheaper in international terms. The flip side, of course, is it's not much good for importers because your imports become more expensive. But this is a very, very straightforward way to boost your economy, make the dollar weaker, and don't forget that has implications on what exactly you're repaying when you go to repatriate loans that you've made. Sue Hassini, how far can the pullback go? I'll show you that in a moment, my friend. So this market would pull back 50%. It's a pretty significant number, 50%. It's about 88.33. This market bottomed at 88.255. Be interesting to watch. If this 50% is broken on a closing basis, then the market is going to go a whole lot lower. Let's have a look. We'll get on we're still on the 12. We can go to how much lower for this pullback go. Depends which market you're talking about, but is it the Dow or the S&P you're interested in, Sue Hassini? Just type it in the question box, and I'll bring up talking the Dow. Good, cool. Here we are. Here's the Dow. Here's the Dow. There's no good choice. This one's a bit better. And they're gone. And let's look. Well, only question you need to know to answer that is which swing is it going to correct. Now, we've got a number of swings here. I'll stick them on so you can see them. No, maybe we haven't. No. Okay. Let's put them on. Add the swing points. They just go down the bottom there. You can pull them up, and we can change the settings on that. On swing points, this is on a strength of 6, so it's excuse me, it's giving you fairly important swings. So you can see there's a swing there, there's a swing here, there's lots of swings in here. Let's have a look. First of all, the smallest range will be corrected. Now, this is a 6-day chart. Okay, so here we are. This is the swing that it's likely correcting right now, and it doesn't seem to be because we're not getting any notification or bounce on that. Let's have a look. Okay, there you are. There's your swing. We've got a bit of target recognition there already, and the number I'd be looking for is 2066, the 50% retracement. That is, if this is the swing that's being corrected. Okay, if the major swing's being corrected, then of course it's a whole lot lower down. But you know, there's no point frightening the horses. The main point of all this stuff is make sure you're with the trend. If you follow the Daniel Code trading signals, you'll be with the trend at all stages, at all times. And as long as you're with the trend, it doesn't really matter to you what the market does it? Albert, when there's a lot of volatility, do you drop the time trades? They happen too fast and concentrate more on trading price? No, Albert, they don't happen too fast. They're great. Trading time is as close to perfect as I've ever seen. It's a big difference. I've been, as you know, I've been trading price for, 40 years, I guess, and I've only been trading time for the last 5 years or so. Trading pure standalone time signals is the most perfect form of trading that I've ever seen, and the results that our clients who are trading time after they've done a Daniel Code video tutorial, the results they're getting are many multiples of the best we've previously been able to get with price. It's quite revolutionary. So the time trades don't happen too fast. They expand and contract with the market itself because they're based on the DNA of markets. Okay, I wanted to show you the 24-day chart because this is extraordinary. Here it is. This is the Dow on a 24-day chart. So every one of these bars is basically a trading month. Look where this high came. I mean, exactly. This is a valid DC trading channel. It's holding the first push out. It's a bit different the S&P. The S&P was holding this push out in May 2010. This is holding the first push out in May 2011. So this is a valid DC trading channel. Look where this thing topped out at. 4, count them from the thicker line, 1, 2, 3, 4. 4 standard deviations from the mean. Unheard of. That's the only other time I've seen that is in blow-off tops in commodities. It's quite extraordinary. So when our friend said earlier, what the hell is happening with the Dow? Well, what's happening to the Dow is exactly what should be happening. It's overbought, so it's correcting. It's that simple. Is this the end of the world? No. For us, we could care less which way the market goes as long as we're with the trend. We make exactly the same dollars going down as we do going up. I know that doesn't apply to other people. I've had some rude messages from people who are locked into stocks saying, you shouldn't be so happy that the market's going down. Well, I am. I mean, we're traders. We love chaos. We want volatility more than anything. You can see the money we've made this last 8 or 9 days because what has happened is we've had a huge amount of volatility come into the equity markets. Lol, says Peter. Lol is right. I had to ask my children what that meant, Peter, but I now know what it means. So there we have it, folks. 666 is the number that caused this top. It was at a place that really was logical for a top. It's also fair to say there have been many other places in the last 6 or 7 months, or even longer, that could have been a top. But this is the one that's taken the first bite, and this came in at 666 in time, and it showed that in the Dow with that extraordinary nice bar down, 666. In the Dow Jones Index. So remember, the beast is savage. He can do good. More often than not, he does harm. And he's certainly done a bit of harm to those poor folks who've got stuck with that buy and hold theory. They might have Mo as a manager. Mo was so proud of the fact that he got his clients to hold all their stocks and shares from the 2007 high to the 2009 low. And of course, he'd been proven right. But boy, there were better ways to handle your clients' money for those 2 years, I can assure you. Anyway, that's it, folks. I hope you've enjoyed it. You understand that markets are doing what they should do. Nothing unusual here. How dramatic is this? Guess we get a little rally tonight. I guess next week is going to be really, really interesting. We're going to have lots of pressures in the US. These markets are very susceptible to what's happening in Congress and those sorts of issues. We've got unparalleled deficit spending in the US. We've got the debt limit to be dealt with. We've got a budget mainly to be dealt with. And all the ancillary things go with it. So keep your antennae sharpened. Make sure you are taking the Daniel Code signals, or at least are aware of them. Good on you, Bob. Bob Wilson says, I'm a DC tutorial wannabe one of these days. Love to teach you, Bob. Shoot me an email as soon as you're ready, and we'll get you done. That's fantastic. Anyway, thank you, folks. Watch what happens in the States. I mean, the political pages are so interesting. 80% of it's BS, of course, but we know that. But it's fun, and we have got some significant hurdles coming up in Congress next week, with a good lot of volatility. One of the interesting things with volatility is once it starts, it does tend to go on for a while. So I'm hoping this won't be over yet, and like to see this rattle on for quite a while. And if there's any change in sentiment with Congress and the strength of the US economy, then we could get something really interesting. So that's it, folks. Thank you for being with me today. I'll look forward to seeing you in a fortnight's time when we'll do the next tutorial. That's 2 weeks. Old-fashioned expression, fortnight. I've used it all my life. I've had people recently saying, what's a fortnight? 14 nights. It's a very old expression, not used so much these days in US at least. Still quite popular in the UK. And we try to do tutorials every fortnight, particularly if there's something interesting going on. If there's anything really exciting happening, we'll do one a bit sooner than that. So thank you for being with me, and glad you enjoyed it. And if there's any particular topic you'd like me to deal with at the next tutorial, shoot me an email, please, jneedham@thedanielcode.com, jneedham@thedanielcode.com, and I'll be happy to prepare something for you. All right, that's it from me. It's Friday early afternoon here. and the pool and a couple of cold Bloody Marys is beckoning. Look forward to seeing you next time. Bye-bye. Thanks, Maddie. Talk to you soon.